Hello, this is SeeWing Yee from the Yee Real Estate Network. And today's presentation, I'm going to share with you, if you want to be a successful real estate investor, you need to do the proper research and due diligence in order to make an informed decision. So as a real estate investment club, we have been running our business model for the past almost 20 years. We are here in San Francisco Bay Area. And we have helped investors, mom and pop investors, all from all over the US to buy out of state, remote, turnkey, passive investment properties, mainly single family home residential investing, but we sprinkle some duplex, triplex, and duplex. So this is our business model, if you will. This is we stay in our lane. We're not going to venture into anything creative like fix and flip or commercial investing or investing in storage units or syndications or some weird stuff that you always see going on out there, or wholesaling or buying investment property with no money down. We're not gonna, uh, you know, get into that because those type of investing, based on my experience, it's just for most people it just does not work. Once again, we specialize in turnkey real estate investments, and we provide a very legitimate, honest, reputable, credible turnkey providers in each market that we promote, and we help people buy cash flow properties in the best markets in the country. Cash flow markets, right? You have to know, you have to understand the numerical formulas. You have to know your criterias. So, and although we have helped many thousands of investors throughout the country to become successful, we're instrumental in helping those people. And hundreds of investors have purchased those turnkey properties in different markets throughout the country, mainly South and Southeast and in the Midwest. All right. So just give you a little bit of a hint, but I'm not going to explain to you what we do, whatever, but I'm going to use this presentation for the next 10 minutes just to give you an illustration. I'm gonna give you a very, very simple example of not to make any kind of mistakes, to run a simple numerical metric that every investor needs. Now, having said that, we have revealed that over the years, not only newbie investors, but many savvy investors continue to make some grave mistakes around buying investment properties. They buy, I mean, they just don't know how to evaluate. They just don't know how to run the numbers, quote unquote, run the numbers. Okay, I will make it very, very simple for you. Okay, so I'm going to show you what is on the, as you can see, what I'm going to show on, I'm going to show you in different houses, in different markets, how to evaluate the numbers. And it's a real quick. I mean, I will show you just one numerical rule, the 1% rule. This 1% rule is called rent to value ratio. Let's say it's 1%, well, depending on the price point. So what I mean by that is, if any kind of investment properties that are approximately $100,000, just merely multiply by 1%, and that would be $1,000 monthly rent. So that metrics, you will achieve positive cash flow with when you finance the property with 20 to 25% down payment. Understand? That positive cash flow means that $1,000 will minus your monthly mortgage of, let's say, $400 at 20 to 25% down payment, given the interest rate in today's mortgages, minus your monthly taxes, your monthly insurance, your monthly property management fee, assuming you're gonna use a property manager to manage your property, and then we even gonna incorporate the approximately 5% vacancy factor and then 5% maintenance factor, okay, into the equation. So make it as realistic as possible. So under 100 grand, but when investment properties are more than 100,000, like uh, between 100 to 150,000, you're not going to get 1% rule. You're going to get like 0.07%, meaning if you're going to buy a property, investment property for 150,000, your gross monthly rent uh, is probably around 1,100, maybe 1,200. So that equal to 0.07% of 1%. And that will yield your cash flow based on this ratio. When you buy a property anywhere from 150,000 to 300,000, you're going to get less of a 1% rule. You're going to get like 0.06%, 0.061%. I don't want to sound too complicated because this is supposed to be a very, very simple presentation. So if you're going to buy a single family home residential property for investment purposes to be rented out around $250,000, your monthly rent should be around $1,800, maybe $1,900. So that's all you have to do. That's all you have to know for right now, right? So the final, not the final comment, but try your best not to buy any single family home properties for more than $350,000. Do you know why? Do you know why? Because the rent you're gonna collect are not gonna reach the level where you can cash flow, where you can meet the 1%. So the benchmark, the sweet spot is $350,000. So what do you need to get? What do you need to project to achieve positive cash flow or maybe even break even cash flow for a single family home, 3 bedroom, 2 bath, or maybe 4 bedroom, 2.5 bath for 350,000. So your monthly projected rent should be ideally around 2,200. You're not going to get anything higher than that. You must understand that, right? Any single family homes above $350,000, you'd be lucky to collect 2,200. So that is the maximum range. That is the maximum effective range of price projection. Okay, maximum effective range. I'm talking military. As a matter of fact, the reason why I'm talking military because I spent 20 years active duty in the U.S. Army, retired, and I retired almost 20 years ago. That's pretty amazing. Okay, I digress. So let me prove to you once again over the years, we have helped, especially in the past 10 years, we have helped hundreds investors buy cash flow properties turnkey in many good markets in the country. And I'm proud to say, we are proud to say here at the Yee Real Estate Network that we have not seen one buyer, one investor lost money. Okay, it's very, very difficult to lose money in the past 10 years because real estate has been in an upward trajectory for the past 10 years and will continue to be on an upward trajectory regardless of what you've been hearing out there, the doom and gloom, the exaggerated, the overhyped real estate information you've been getting from the YouTube videos, what have you, etc. Don't fall for those scary news that you can hear out there. If you just focus on your long-term investment goal. Because when you buy property, especially in today's world, I know it's not easy as an investor, but knowing that this is a renter's nation. What I mean by that, there are more renters right now and into the foreseeable future than ever before in the history of America. What does it mean? That means if you buy in the good markets, cash flow markets, and you put yourself a good team, and you have a very reputable turnkey provider on the ground in a specific market you want to buy, the house you want to buy, that you're going to have 20 or 30 rental applications for your house once you put your house, once you close escrow and put your house in the market. That's what we've been seeing for the past couple of years. More and more people are renting now than ever before. I mean, I'm not going to explain to you why. You can search the YouTube video and you will clearly will reveal that this is the case. But okay, I'm going to just show several properties on Zillow. I took this website. Let me give an example of what you need to do in what not to do so far, right? So let me show you a property in San Francisco Bay Area in Fremont, for example. All right. So here's a listing. Okay, this property, 3-bedroom, 1 bath, 1,079 square foot in Fremont, California, right on the east bay of San Francisco. By the way, myself, I live in the San Francisco Bay Area, just so you know, for the past 30 years. So I know the Bay Area very well. I know the real estate market very well. So let's say you live in the Bay Area. You are a real estate investor. You physically live here. You want to buy investment property in your own backyard, and you are picking this property. There's $1,099,000 property. So let's apply the 1% rule, or maybe even 0.07%. Right? That's the numerical range for the rent to value ratio. So with 1% rule, based on your research, you need a potential tenant that's going to pay you how much? What's 1% multiplied by 1 million? You need a potential renter that's going to pay you $10,000 a month for you to cash flow on this property. Cash flow meaning 20 to 20% down payment, assuming you have $250,000 down payment plus closing costs of 10 grand. If you have $260,000 of down payment, yes, you can qualify to buy this property, assuming you qualify to get financing, you have good income, et cetera, et cetera. But the question is, are you going to be able to find a renter that's going to pay you $10,000 a month, or even $8,000 a month, for example, or $7,000 a month? Most likely not. The maximum effective range of rental income you get from this kind of property, believe me, I know, is around $3,500. So clearly, you're not going to cash flow, right? If you put 25% down payment, if you wipe out the 300 grand of down payment, yeah, do the numbers, right? Do the gross monthly rent minus monthly taxes, insurance, part management fee. At the end of the month, you will get how much cash flow? I don't know, negative $1,000. Negative. You're in the red. You're gonna lose money. The best way to cash, you're thinking, oh, I see investors buying with cash from all over the country in the past 12 months during the real estate boom. Okay, do you have $100 million of cash to buy this money all cash? Yeah, if you have the money, yeah, you can cash flow. Yeah, because you have no mortgage. You can cash flow maybe slightly because your tax is going to be $1,000, your insurance is going to be a couple of hundred, then your property management fee is going to be whatever, $350 a month, whatever. You can cash flow a little bit, but if you have $1 million of cash, I'm not going to put all cash down payment to buy in a high cost market like in San Francisco Bay Area, Fremont, whatever. Right? I will diversify. I will spread my money out of state to buy reasonable prices. Okay, you get my drift. Okay, let me. I can use any example. In fact, let's go to another market. Okay, just to prove my point. Okay, I will prove my point just a little bit more. All right. So, they say, okay, oh yeah, I heard from my friend that the prices in Sacramento is a lot cheaper. We can afford to buy a rental property there. Okay, let's check. On this particular week, there are 10 properties for sale in Sacramento. Okay, let's click Sacramento. All right. Oh, I found a $335,000 in North Highlands, California, right outside Sacramento. 4 bedroom, 2 bath, 1,286 square foot. And I'm not going to talk about the condition of the property, the neighborhood, whatever. Let's strictly talk numbers. So I know Sacramento very well, of course. I go there quite often over the years, almost once a month, right? Uh, so so what do you think? You need? Let's apply the 1% rule. 1% multiplied by 335,000. What? You need like $3,300. Somebody, you need a potential tenant going to pay you 3,300. Okay, 1% rule maybe is too ambitious. Maybe 0.07%, 1%. That might be 2,800, or maybe even 2,700. Or you're going to find someone going to pay you $2,700 to rent this house. Let me save you the trouble. No, the most people going to pay you on this house in this neighborhood in Sacramento for this house, for this square footage, is probably 2,200. So you put 25% down payment, it's not going to work. You're going to have a monthly negative cash flow. You're in the red. You'll lose money right off the get-go. Have I proved my point? And this is one of the cheaper property, 335K. I mean, with the multiple offers out there in a multiple listing service, with 10 offers on his house potentially, you're not going to buy a 335,000, maybe 375, maybe even $400,000 in this today's hot market. But okay, these just this is one of the cheaper ones in Sacramento, and North Highland is not the best neighborhood. Okay, I'm telling you straight up. Okay, look, there are much more expensive homes in Sacramento, even right now. 624K, 1.3 million. I know there's a larger one. It's in a good neighborhood. 555,000. No, not in Sacramento, not in the Bay Area, not even in anywhere in California, right? Especially for those of you that live in California, that's why you should buy out of state using a credible, reputable turnkey provider. You can buy in a market that will give you cash flow, that have property management to help you manage your property. Let me give you one more example, all right? Let's say, okay, I'm not gonna use California anymore. I'm gonna use another area. Let's use Naples, Florida, which is in Southwest Florida. Florida, a great place to invest, but you have to know which neighborhood to buy, right? You have to know. Okay, 299K, that's might be okay, but 2 bedroom, 2 bath, 1,100 square foot. As an investor, would you buy this? Probably not. I would probably want to buy three bedroom, 2 bath, but if they're available, if they're open to investors. Let me see what else. Oh, Naples is in Southwest Florida. It's a good investment area. I wouldn't buy Naples because the price point is too high. As you can see right here, 3,000 square foot is 1.1 million, 749,000, right? They way exceeded the minimum price point of 350. Okay, for the numbers. So in Cape Coral, Florida, which is up the road, 20 miles up the road, Naples, yes, that's a good area to buy. Of course, we are promoting the Cape Coral, Florida area, so we know the market very well. Should I go through another another situation? Okay, forget about California, right? We agree with that. All right, so let's pick St. Petersburg in Tampa metro area. But St. Petersburg, by the close to the beach, is a vacation town, obviously, but it's rather expensive. I do not believe the numbers is going to make it there. So 1,600 square foot in St. Petersburg in the Tampa suburb is already 625K, so way exceed the benchmark for cash flow. Let's talk Austin. Here's an Austin, Texas property. A 3 bedroom, 2 bath, 1,500 square foot, already 750K. We used to promote, we still promote Austin, but not in the downtown area, not in the inner metro. That's way, way too expensive. You have to buy in the suburbs, like less than 300K. If you can find them in Austin, because the market has been exploding, is on fire. See, some of these properties, 750K, there's no way. The price appreciation, look at this. $1,400, a 1,400 square foot inside Austin, 765K. So stay away from those high, good looking, expensive houses. Those houses are not gonna help you achieve your financial freedom, okay? You need to buy uh, uglier houses. I hate to say this. In other markets, Austin's fine. You can, there are pockets in Austin where you can buy for cash flow, but but you have to know a turnkey provider that can help you. Of course, we can help you. So are we clear? Should I do one more? Um, I want to do one more outside California. So let's do Jacksonville. Jacksonville, Florida, normally is a good market. It's a cash flow market, but you have to find the right neighborhood. I wouldn't buy. Look, if you buy in the south and southeast market, it has to be like 3 bedroom, 2 bath, like 1,500 square foot, either new build, new construction, or resale homes, like 5 to 10 years new. Those are my criteria. But some of these properties are, I wouldn't buy them. Look, even a 2,000 square foot in Jacksonville, is Florida, is already 457K. Now you see how hard it is to buy cash flow these days. A couple of years ago, the Jacksonville, Florida market is the price is much lower than what you see here on Zillow. All right, so yeah, you have to know what neighborhood but to buy, what pockets to buy. There are some good neighborhoods in Jacksonville like 659K. No way, right? And you don't townhome. You don't want to buy townhomes. Uh, so yeah, 300K maybe if you can get 2,200. I don't think so. The rent you're going to get is most likely 1,700. So the number is not going to work for this kind of property. It's too expensive. All right, have I proved my point? Okay, forget about some of you thinking, oh, the top 10 fastest growing appreciation market are in Seattle, Washington, Boise, Idaho, Phoenix, Arizona, or Salt Lake City, Utah. Yeah, those information articles, the YouTube videos sounds really great. But one further look, okay, let me get back. Let me stop share, okay? Let me conclude. Look at the median price of a single family home in those markets. Just because the news media said it's one of the top appreciated market in Boise, Idaho, or Seattle, Washington, or somewhere in California, or Phoenix, Arizona. Yeah, they are very hot market. That's true. I mean, everything. I mean, they're getting double-digit appreciation. But let me save you the trouble, right? The median price of a single-family home in this market, these hot markets, right now is probably 400,000 to 450,000. Uh, right now, you're not going to cash flow. The rent is going to be like 1,700. So not only you're not going to meet the 1% rent to value ratio, you're not going to meet even anything close to the even 0.06% of 1% rent to value ratio. Okay, so you have to know where to buy, what price point, knowing the 1% rule. That's my recap. What neighborhood, I mean, what turnkey provider. You want to do it yourself? By all means, take that risk. You're gonna you you might gonna go through a nightmare. All right, you don't want to do that. This investing is you put a lot of money down. Okay, you cannot afford to make a mistake. You cannot do it yourself. Go through the services of a reputable real estate company. All right, that can help you to do most of the stuff for you. Okay. All right. Hope this helped. There's a lot more to it. I just went through one small aspect of research, risk investing. There are many more criteria, but we have other videos, hundred other videos on the YouTube channel. You can do some you can watch my videos. Just subscribe to my videos, and you can receive weekly updates on my YouTube channel. And also, better yet, just log in your email for free membership into my organization. You will receive even more specific weekly uh, uh, email newsletters that will help you potentially take action on properties. All right, thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye bye.